30 million. The whole expansion after 2001, it began in November 2001, was a very artificial expansion that benefited a few people, namely Wall Street and the speculators, and bypassed the middle class and the working class. So, it was very asymmetrical recovery. And this is exactly what they're trying to do today again.
Well, having said that, then is there an economic foundation for this perspective? I mean, because is there any chance that there would have been other economists, other economic views that at least would have been listened to by the Federal Reserve chief?
Well, I think that what is the funny part about all this is the article of Mr. Krugman says, how did economists get it so wrong? He should have written, how did economists in the government, at the Federal Reserve, and at universities get it so wrong? Because in the private sector, there were lots of voices that actually warned about the impending problems, like Henry Kaufman and people that write regularly, like David Tice of Prudent Bear. He attracted the attention of people to the bulging debt growth and so forth and so on. I mean, the private sector saw the problem coming. And that's why actually a lot of hedge funds didn't do all that badly. When you look at, say, who did the worst, it's the government. The government owns Fannie Mae and Freddie Mac. Both went bust.
Bring in Lee Iacocca, if you can. You reference him in the most recent issue of your newsletter. What should we take away from Lee Iacocca and his new book called Where Have All the Leaders Gone? Is that something everyone should be reading on their nightside table?
Well, I think he makes some very good points about essentially a lack of leadership and a lack of competitiveness in the United States, and also a lack of interest in politics, that people just have resigned to how things are. You just mentioned Qatar Airways. I wished every American would first go on an American Airlines flight or United Airlines flight and then on an Air Qatar flight. It's like day and night.
What do you make of the argument that perhaps would come from the American Airlines side, which says, you know, we serve a wider route structure, we've got many more people, we've got embedded costs, the whole business model of running an American Airlines to a newer airline, they're just different?
Well, I'm not sure that this is a valid excuse because, you know, you have like American, they fly to Latin America, and United flies to Asia and so forth. And even on these flights, there is a huge difference whether you fly, say, a Middle Eastern airline like Emirates or Air Qatar or Singapore Airlines or Cathay Pacific and an American airline. And the Europeans, I mean, I'm not saying that Lufthansa is far better than United, but it's somewhat better.
So has something changed then? I mean, has there been a cultural change? Is there a change in the society? Because you also write about that, how societies change. And in fact, you make mention of this notion that 200 years is about the best that a great society can hope to achieve in terms of longevity.
Well, all I'm saying is when I first went to Asia in the early 70s, I also traveled at the time to Latin America. You went at that time to Sao Paulo or Rio, or you went to Hong Kong, Singapore, Bangkok. There was a huge difference between an American city, San Francisco, Los Angeles, Miami, New York, and these cities in emerging economies. And today I go to Sao Paulo. I don't see much of a difference between Sao Paulo and Miami and Los Angeles and San Francisco. In other words, I'm not saying that America and Western European cities will fall into the bottom of the ocean, but there hasn't been that much progress. Whereas in emerging economies, you had a huge increase in per capita incomes, in real terms, in standards of living and so forth. And this we can observe. Car sales today in emerging economies are larger than in the developed countries. And in China, car sales are larger than in the United States, and so forth and so on. We just cannot deny that. And we can blame ourselves. Maybe we didn't do some things right and so forth. But in the case of America, one of the major problems of the last 30 years is that every problem was addressed by economic policy measures that drive consumption. And consuming is exactly what the word says. It's consuming. So in other words, if you eat the cake, then you don't have the cake anymore. And the difference between investment and consuming is when you invest, you have the investment at the end of the day, whereas when you consume, it's gone. And you cannot build wealth based on consumption and the lack of savings. What you have to have as a policy is to encourage capital spending in plant and equipment, infrastructure, and research and development and education.
Can you speak a little bit about perhaps this idea of investment versus consumption? Because you do make the case that successful societies, centers of prosperity, they grow out of some kind of challenge. Is that now eluding the United States?
Well, I think every society goes through the same cycle. At the beginning, people are frugal, they work hard, they save a lot, they want to build a better future, they start from a low base, and then they become affluent, they win wars, they become more arrogant, and if they happen to be big countries, they may become a superpower like the United States. Then they go and teach the world about their principles, and of course they try to safeguard their own interests, so they also create a lot of enemies and so forth. But basically, at the end, they become very complacent, and especially countries that have a world currency. You see, if you're Indonesia and you have a current account deficit that comes about through overconsumption, which is reflected in the trade deficit, then you have to borrow foreign currencies to make up for the current account deficit. And there comes a limit when the foreigners don't want to finance it anymore, as was the case for Asia in 1997, because prior to the Asian crisis in 1997, most Asian countries had large current account deficits, and one day foreigners said, oh, we don't want to finance it anymore, and then we had a crisis. But if you're borrowing in dollars, like the U.S. does, then basically there is no limit of how much they can borrow. The dollar can go down and down and down, but someone will still buy dollars. And so the ultimate hour of truth can be postponed for a long time, but it doesn't change the fact that the standards of living of an American essentially go down because his currency declines. In other words, when I grew up in the 60s, the dollar was a very strong currency, and Americans that came to Europe, they were like kings. I remember we went to Spain, and there were American soldiers. They lived like kings compared to the locals and compared to us Europeans because they came with dollars. Today, an American who travels to Europe with dollars, he will feel that Europe is very, very expensive. He doesn't feel rich at all. He can't spend much money because it's too expensive for him. And that is what I mean with a declining standard of living.
Marc Faber, an interesting statistic and an interesting fact that you cite, this coming in the most recent issue of the report, this coming from A.C. Nielsen, saying that the American public is one of the most cash-strapped people in the world. In other words, they use this concept of saving futility. What does it mean by that, and why is it important?
Well, I think that it's like debt. If everything goes well and business expands and you have an expansion, to have leverage, in other words, to have borrowings, is favorable. But if I look back at the 35 years I lived in Asia since 1973, I've seen one thing. We had many cycles. We had the 73-74 recession, the 81-82 recession. Then we had Tiananmen Square, 89-90 recession, and the Asian crisis, then the downturn in the Nasdaq, and so forth. It's remarkable that the people that were conservative they still do well today because they could weather the downturn. And don't forget, in Hong Kong, after 97,